Welcome to QAV America. Tony, how you doing?
Good. I'm doing well. I've just had a week off and it was been lovely and played golf up in Yarrawonga on the Murray.
Let's talk about US market. J. Powell, Jerome H. Powell, said the balance of risks across the economy had started to shift, raising the odds the central bank lowers borrowing costs at its next meeting in September after he was a J-hole. J. Powell was a J-hole. You would think that when the chairman of the Fed says the economy's not going well, the market would react negatively to that. On the contrary, market thought that was the best news they'd had all week.
Yes, we're through the looking glass, aren't we, Cam? I mean, that's just, yeah. Jerome Powell came out and said that he thought there could be a decline in employment, which would cause a slowdown in the economy, and the market cheered and went up 1.5% for that.
Yeah. Good times. Good times. Well, speaking of good times, we just talked about our US portfolio. So for new listeners, hi, welcome. Yes, we're two Australians talking about value investing in the United States. We've been doing a podcast about value investing in Australia for 5 or 6 years. And we've got a US portfolio that I started back in September 2023, following our QAV methodology that Tony's been developing over 30 odd years. Quality at value is what that stands for, in case you're wondering. And that portfolio since inception is up about 74% versus the S&P 500 up about 45% over that period of time. In the last 30 days, our portfolio is up 8.6% versus the S&P 500 up about 0.8%. So in the last week, some of the stocks that have done particularly well for us are RM, Regional Management, up 8.5%. Gas, GASS, Stealth Gas, up 7.5%. ENVA, ENVA, and Nova International, up about 6.2%. Overall, our best stock has and continues to be Willis Lease Finance, WLFC. It's up 223% since we bought it, although it hasn't had a good year. It's down from about 300% at some point it was. But generally speaking, our portfolio is doing well in the US. Tony, and as I did last time we did an episode, I've been keeping a list of the stocks that I've been doing deep dives on this show. And just to see, because we don't hold most of them in our portfolio, because our portfolio has been fully invested for quite some time. And unless I need to trade something, I don't have any capital left to put stocks in. But I'm keeping track of how they're doing. Some of them have done all right. ZEPP, the Chinese smartwatch manufacturer that I did a deep dive on the 11th of July, is up 1,218% since then.
Wow. They should send you a cheap watch.
Price was $2.98 when I talked about it. It's currently $39.29. I like somebody on TikTok, when I posted a story about that last week, said, yeah, but it's not going to last. It'll come back down.
Nice.
And it probably will. But yeah, up 1,218%. That's insanity. And I think the last time we spoke, I said I didn't know why. I do know why. They hadn't come out with new results since then, but they have come out with celebrity endorsements for their products. So celebrities that mean nothing to me because I'm an Australian, but they have come out with news about various celebrities that are doing, something, promoting their products, which apparently is good. So, that's good for them. Don't know if that's everything that's got to do with their price rise of 1,200%. You'd think that there'd be more than a couple of celebrity endorsements to do that, but No new financials have come out that I can see. So unless it was just me talking nicely about them, I don't know. So what else? Let's see. The last one I did, Titan Machinery. I did that a couple of weeks ago. They're up 8%. Grey Media that I talked about 7th of August, they're up 37% GTN.
Wow.
Sasol, the dirty company, oil company that I talked about, are up 40% since we talked about them in the middle of July. Were you going to say something?
Interesting about GTN. Yeah, I meant to mention this on the Australian show, but I forgot to. I've noticed on our buy list, we've had legacy media companies like Seven News and Seven West News, it's called, Southern Cross Entertainment. So they're TV networks in Australia. And they've been on our buy list on and off for a long time. They've all kicked up and since reporting results in the last week or so in Australia. I think Southern Cross was up like 30% on the day of its results announcements. I'm wondering whether that's a theme that's going on in the market at the moment, that legacy media, which has been much unloved because streamers are taking over. I've seen this before, when an industry goes through a phase where it's unloved, it becomes a value stock. And if the underlying business still has good assets, eventually they become so cheap that they get bought and bought up. So that could be the case with GTN.
Well, yeah, a lot of, I don't know, but a lot of our stocks have been doing well that we've covered on this. Couple haven't. Zim Integrated Shipping that I did back in March is down 21% since I talked about it. NL Chile that I covered in May is down 13%, but the rest are very much in the black. So
that's a good point you make, Cam, is that, as we know from our experience in Australia, we don't get every call right or every stock that we analyze goes up. It's the fact that we get, probably 6 out of 10 right, and they do well, and they allow us to cover the 4 out of 10 that don't do as well.
And we have rules in place for when to sell things. So the things that don't go well, we get rid of them when the time is right and replace them. Yeah. So the company that I'm going to talk about today, Tony, is Kimball Electronics. KE is the ticker code. I do want to point out, though, that I'm using an analysis that I did on August 8th when the price was $19. Since then, they came out with new financials on August 14th, and the price is now $28. So this would have been a much more impressive pulled pork if I'd done them a couple of weeks ago. I haven't run the new numbers, but they probably look good because the share price went up 50%. I did run the new price. I put the new price into our checklist, and it didn't change the scoring a great deal. But I think price to book is the only one that it did score for, and now it doesn't score for because the new price is above the book price. But it still came out well, assuming the rest of the numbers are just as strong, and I do because of how the share price reacted to their results. Anyway, as I often say when I do these, obviously do your own research. This isn't a recommendation. It did turn up on our buy list a few weeks ago. I think it's an interesting story, but the more interesting thing that for me when I'm doing these is the kinds of businesses that are available to invest in the United States that I've never heard of. They're not the kind of businesses that we see in Australia on our buy list. It's a different market, much bigger market, much broader scope for investments. But it's just to point out that there are lots of, when you're turning over rocks in the US, there are lots of gems under these rocks. Is that what you find under a rock, or do you find
inside
worms? Yeah, inside the rock. Okay, picking up the rock, cracking it open. Yeah.
Well, and the US market has different characteristics to the Australian market too, which is the other interesting thing. Far more industrial type companies in the US than there are in Australia, which is dominated by banks and miners.
Yes. Just a little bit on their new financials. Kimball Electronics Q4 sales beat estimates. Q4 net sales were up 2% sequentially, beating analyst expectations. Adjusted EPS for Q4 beat estimates. The company repurchased 162,000 shares. You mentioned on the last show that you're looking to add buybacks into our checklist if we can figure out how to get those into our system. But my numbers, as I said, are out of date, so do your own research. So who are they? Well, interesting company with an interesting story and background. Essentially, this company, Kimball Electronics, is a contract electronics manufacturer. They don't sell flashy consumer stuff. They build and assemble the electronic guts inside of other companies' products. So think of circuit boards and control modules in car safety systems or medical devices or industrial machines. If you are a manufacturer of one of those things and you're looking for somebody to make some of the core electronic innards, you go to Kimball. They've been doing it for a long time. They build it for you, and they've got a very long track record and very good reputation for quality control and delivery and all that kind of stuff. They're very, they have a great reputation for being ultra reliable, for building durable electronic components is their thing. With a great culture as well. They're very big on their human culture. So everything from printed circuit board assemblies to finished electronic devices for clients, even non-electronic parts in some cases like precision plastic components. But if an automaker needs a brake control unit built to spec, or a medical firm needs a potential patient monitor assembled, Kimball is one of the go-to behind-the-scenes manufacturers of all of that kind of stuff. The roots of it, though, go back to pianos. The roots of Kimball Electronics goes back to 1961, but the parent company, W. Kimball and Company, was, for much of the late 19th and 20th centuries, the world's largest manufacturer of pianos and organs. The company started as a piano dealership in Chicago in 1857 as W. Kimball and Company, started by a guy called William Wallace Kimball. He died in 1904, but was just a kind of a legendary guy. Actually, I read that in his company at the time, he got rid of punch cards, which were the thing at the time, and just built the culture around trust. I trust that you're at work when you say you're at work and I'll pay you. So he really built a strong culture that was built around trusting his employees. And they built on that later on. Actually, one of the other guys built on that who ran the company. The pipe organ division that he built was also large. They built permanent pipe organs, including one for the Mormon Tabernacle Choir, which was installed in 1901. And I have a family connection to that because one of Chrissy's sisters, Tanya, sings in the Mormon Tabernacle Choir. So she might be singing along to one of Dub Kimball's creations. I'm not sure if it's the original that's there, but probably. Wow. I don't think pipe organs, if they're well maintained, get replaced that often. Used to know a guy, had a listener of my podcast years ago whose father was the maintenance guy for the pipe organ at the Sydney Opera House. Wow. He's like the only guy in Australia, I think, or maybe one of two people in Australia who still knew how to maintain and tune pipe organs. Good gig. Yeah, and they need to see you like once a year, but you probably charge a lot when you go in. So back in the 20th century, Kimball International, which built an electronics division to build electronic organs. The Hammond B3 and stuff like that you'd get in churches, which ended up as part of blues music. I don't know if they actually built the bit for the Hammond B3, but okay. Don't know. But they built electronic organs. So they went from pianos to pipe organs, from pipe organs to electronics organs, and then they went broke. And then they were bought by a company called the Jasper Corporation, which was founded in 1950 in Jasper, Indiana, where it's still headquartered, by Mr. Arnold Habig. They started off making television cabinets and other cabinets and furniture. He has a great story. He spent 20 years with Jasper Wood Products Company, started as janitor, became plant manager, then became a member of the board of directors, and then launched the Jasper Corporation. And his own business came out of Jasper, but, built his way up from nothing, this guy. Real American, bootstrapping sort of story. And obviously a good time to be building television cabinets because television sets were booming in the 50s. Then he started sort of doing this vertical integration thing and bought W.W. Kimball and Company as a subsidiary in 1959. It had gone broke. It was nearly insolvent for some reason. Yes, the electronic church organ business wasn't really kicking it. But by 1969, they were again the world's largest piano manufacturer. And in 74, Jasper Corporation changed its name to Kimball International. 1976, they floated on the NASDAQ. And as the head of Kimball, Habig operated a profit-sharing system for company employees and a scholarship program to fund nearly $2 million of his employees' children's college educations. Good guy.
Yeah.
Lots of good guys in this story. Yeah, so there you go.
Interestingly enough, that he restarted the piano manufacturing business when it went broke originally.
I think, he must have, I don't know, figured out how to fix it.
Yeah.
I think they'd made some bad investments, different places, as has Kimball along the way. Since then, things don't always work, and you sell bits off and keep the core business. Apple was nearly broke when Steve Jobs came back in 1997, 8, whenever it was. Did okay. Turned that around. What else? As part of the 1984 Summer Olympics opening ceremony in Los Angeles, 84 Kimball pianos were played. There you go. Fast forward to 2014, the Kimball Electronics business was spun off as an independent public company, separated from the furniture business to focus purely on electronics manufacturing, but it's still headquartered in Jasper, Indiana. So they've had a few speed bumps along the way. 2016, they acquired a small firm called Medivative Technologies for about $8 million, trying to get deeper into medical devices. Then they bought Global Equipment Systems in Silicon Valley for $50 million a few years later. It specialized in automation and test equipment for semiconductor manufacturing. Didn't go quite as well, turned out to be a bit of an odd fit. In 2024, they decided to sell off the entire GES division, which was referred to at that stage as the Automation Test and Measurement business, to another company. Labeled them to focus on their bread and butter, which is contract electronics for auto, medical, and industrial clients. And the business has done well since then, just getting rid of that bad division and refocusing. So now they operate globally with manufacturing facilities in the US, Mexico, Poland, Romania, China, and Thailand. About 48% of its revenues comes from the automotive sector, 25% from medical devices, and 27% from industrial applications. So about half of the business comes from cars, making stuff for cars, steering and braking control units, and the rest is split between the other sectors. That means they're diversified. So if there's a slowdown in auto production, they've got some buffers in the medical side of things. And, as you can imagine, medical devices with an aging population, and particularly with AI helping us figure out new things and figure out new ways to do things, should be a pretty healthy business. I think in the next 10 years, we're going to be using AI to figure out how to make people live longer and healthier lives, hopefully. I note that OpenAI have announced today that they've just launched a new scientific genetics biology division with another company where they're trying to follow in Google DeepMind's footsteps. Google DeepMind won the Nobel Prize for biology this year,
Really?
for the work that they did with protein folding. They figured out how to. I think up until that point in time, humans had figured out something like the structures of 10,000 proteins. They did about 1 million in like a month or something after they built a neural network to figure out protein folding. Which is a huge thing for medicine, biology. They generate about $1.7 billion in annual sales in FY24. They've got about 24 million shares out there. Market cap is in the few $100 million range. What else can I tell you here? What's working and why it's cheap? So one thing that works is it generates a lot of cash relative to its size. Last year pulled in about $154 million in operating cash flow, and has had positive operating cash flow for 6 quarters in a row. They've done a lot of good stuff in terms of their capital management. They slashed inventory by $23 million in 1 quarter, which was a 25% reduction, freed up a ton of cash. And, they're just one of these businesses that's been well run for a long time, been around for a long time, and knows what it's doing. It's just generating a ton of cash. And the prop CAF is really low, but I'll get to that a bit later. In terms of a moat, it's got a pretty good competitive edge, it seems. Like, this isn't the kind of business where you're getting the cheapest possible componentry with the low end of the market out of China. I mean, they do manufacture in China, but they're obviously, doing the quality control, that kind of thing. Stuff's going into braking systems and steering systems and medical devices. You want it done by a company that has a good reputation for quality control. And these guys are tier one suppliers for both the auto industry and the medical industry, and they have been for over 25 years. They've got a golden track record, very, very good relationships with the big manufacturers in medical and automotive, very, very rigorous quality standards. They're known for delivering on time and on budget, same with medical devices. So there are pretty high switching costs for those industries, so that's kind of a pretty good moat. And they have a global footprint. So they build in Mexico for US customers, Poland and Romania for European clients, sort of not a just in time, but a sort of a build it closer to home kind of model. Quicker, faster shipping, doesn't have to go on a ship from one side of the world to the other. I guess when manufacturing ramps up or slows down, it's better on inventory levels. It's not the biggest EMS player, electronics manufacturing service player out there, but its moat is really built around being highly dependable and highly reliable and having deep, long relationships. But despite that, the market has been discounting it, possibly because growth has been fairly tepid recently. Revenue is actually declining slightly this year, or is expected to. Management projecting a 2 to 9% drop in sales for the upcoming year. Profitability also took a hit in FY24. Their net income plunged. EPS fell from about $2.22 to about 81 cents. A lot of that was due to one-time charges like a goodwill write-down and an asset impairment related to the business they sold. But on the surface of it, it doesn't look great for some investors. They also don't pay a dividend, so some investors aren't really interested in it. They hadn't done big share buybacks until the one that they announced recently. So, being sort of a smaller mid-cap stock for 500 million in a low-margin industry, it's kind of not really a target for big institutional investors. There's also some fear, I think, about customer concentration risk. In FY24, 2 customers, both in automotive, made up nearly 30% of their sales. So if they lose one of those, could be a big blow to their business. But that said, so far, they're doing well. In terms of near-term catalysts, there's a couple of things that could go well for them. The CEO recently noted that they had a record number of wins for future business in the pipeline. Don't know the details on that, but seems to suggest they've got a lot of new contracts or programs that haven't hit the revenue line yet that could be kicking in over the next couple of years. Sales could get a boost. They're intensifying their focus on medical devices, positioning itself as a medical CMO, contract manufacturing organization. Usually higher margins in medical than in automotive, and it's a bit of a stickier business, I understand. So more growth there could improve their overall profitability. And then the sale of the GES division that I mentioned before, they use that to pay down debt and buy back the shares. So they've been using that money wisely to attract investors, I think, and also just to shore up their business situation. Lowering debt means lower interest expenses, helps earnings. Share buybacks means future earnings are split among fewer shares, boosts the EPS, et cetera, et cetera. So they're trying to boost shareholder value. They've got a new CEO. I think he started last year I read in the last financial report. So I gather he came in to, make some cuts, make some changes, clean it up a little bit, cutting costs and doing a bit of a Tim Cook on the inventory situation. So let's look at some of the numbers. The price to operating cash flow is 3. So
Wow.
for new listeners, that means that the stock is trading about 3 times its recent operating cash flow. The way that we always talk about it is if you bought a business like a coffee shop, as our go-to analogy, that had a price to operating cash flow of 3 years, it would mean that it would feasibly pay you back in 3 years, which is a fairly short time frame for a business to pay you back. So it's pretty cheap. It's one of the most important indicators that we look at in terms of valuation. Dividend yield is 0, as I said. The Petrovsky F score, financial health score from that Stockopedia use, is a 7 out of 9. So that's pretty good. Generally, a 7 indicates a company with strong financial health for a value stock. Suggests that despite a low stock price, its financial fundamentals check out positively on most fronts. Positive earnings, positive cash flow, no increase in debt, other improvements over recent years, reduces the risk of there being a value trap. Book value per share was when I did my numbers about $22.98. The share price was about $19. As I said, the share price is now $28, so it's above the PB. But I haven't rerun the PB numbers with the new financials, so I'm not exactly sure how that would stare up. So I don't want to talk too much about that one, but at the time I did the scoring, it was positive. So why it's on the checklist, it's a classic value play from my perspective. Solid financials, solid cash flow, trading at a bargain basement valuation, had some short-term issues. Seems to have done some restructuring in the last year or two that's put it in a better situation. But it's not a sexy business. It's not doing AI. It's not doing, smartwatches like ZEPP. It's not a company you're probably going to read about in Forbes magazine or the Wall Street Journal any day now. Quiet little business behind the scenes, contract manufacturer to other businesses. A lot of upsides. As I said before, the medical business, if they can build that segment up, it could be good for them. If automotive production picks up after tariff and supply chain issues get sorted out, if they ever get sorted out, that could be good for them. I also looked a little bit at what their tariff exposure is. It's who knows. It's lick your finger and hold it up to the wind. The CEO says, they're factoring it in and they're working on it. But he, like every American CEO, is like, who knows what the hell's going to happen tomorrow. So Will there be another pause? Will there not be a pause? Will they go up? Will they go down? Nobody knows. So all we can do is just play it day by day. There are red flags, of course. Cyclical risk, as I mentioned. If the economy slows, orders for cars and other equipment can slow, their business line can dry up. They've already seen a bit of a sales dip over the last year or two. If Jay Powell's recession or job slowdown or whatever it is he's predicting kicks in and the economy stumbles even further in the US, that could have an impact on them. They have pretty thin margins in the car sector, as I mentioned, so not a lot of room for error if they get something wrong there. Customer concentration, as I mentioned too, could be a problem. But again, these are all predictions and we can't predict what's going to happen in the future. I just look at it where it is today. The punchline is they're sort of an ugly duckling stock, I think. Fundamentally, decent business, well run. Market doesn't seem to like it for whatever reason. It's kind of being ignored, but they're making money and they seem to be well entrenched in the businesses that they're in, and they have some room for growth in the medical services thing. Doesn't necessarily mean the company is going to double in size, but from an investing perspective, I think they're undervalued and there could be all sorts of opportunities around that. In terms of how they scored on our checklist, they have a good average daily trade, as I mentioned. Recent financials were good. Even the ones that I haven't checked look good. Their price to operating cash flow is low. Quality rate is a 79 in Stockopedia. We score anything equal or above 60. Stock rank is a 99. We score equal or above 90. Petrovsky score was a 7. We score equal or above 4 or 5. They failed both our intrinsic value number 1 and intrinsic value number 2. When I did it, intrinsic value number 1 was $5.78. Intrinsic value number 2 was $9.03. For new listeners, we don't live or die on our intrinsic value calculations. They're just two metrics across a whole heat map that we look at, but it did fail on both of those. It also failed on the future IV being greater than twice the price. It failed. Well, when I first did it past price less than book value, it would fail it today, but it would still, assuming the book value hasn't changed dramatically, it would still pass price being less than book value plus 30%, because book value plus 30% is $29.87, so it's slightly below that. It's had positive book value growth over 3 years, does not get a score for growth over PE, does have a new uptrend, does have a positive 3-point trend, but the dividend yield is not higher than the bank rate because they don't have a dividend yield. So when I scored it, it got a 10 out of 14 or a 71% score for our quality score. When I re-ran it with the new price, it was about the same, and I had a QAV score of 0.24. So pretty strong.
Really good. Yeah.
Yeah. But great little business. Something a little bit different yet again.
Yeah. And I was looking at its numbers in Stockopedia while you were talking then. The question I always ask myself is, it's a good business. Why is it not being bought? Apart from the fact the share price has gone up since the results came out. And I think it comes down to growth. I think the forecast EPS growth was negative, at least at the last results. So I know it's now forecasting to grow in the future, but the market's so focused on growth, it can lose sight of the fact that it's still a very good quality company with lots of cash coming in, and that's a good thing.
Yeah, I mean, I guess there are different ways of looking at companies like this from an investor's perspective. I mean, okay, what's going to make the share price go up in the future? Yes, more growth, more money that's going to be doled out as dividends or used as buybacks. You're looking for a a business that's doing well, and that's going to be reflected in some way, shape, or form in terms of the interest that the market has in it, but also just ugly duckling stocks that there's a lot of value in it, and the market's just not reflecting that accurately today, right?
Yeah, correct.
Because they become targets for acquisitions, or
Could be.
they have cash, they can go and buy things, and they take advantage of opportunities out there. You know, there's lots of different ways that it can become a good for an investor if it's a well-run business with a lot of cash flow opportunities.
And that's the key. I mean, if this business didn't have the cash flow, you could say, okay, well, we need to mark it down on growth. And then how's it going to get growth? Well, probably it needs to raise capital from shareholders, which is not a good thing. You get dilution. But a company that has some growth speed bumps at the moment, and I'm saying growth speed bumps, if you look forward, the 2-year projection in Stockopedia is to get large earnings per share growth, just not in the next half. So, you're better off having a company throwing off lots of cash and then using that cash wisely to get back into growth, either through acquisitions or retooling factories or whatever. I can imagine this particular industry is quite capital intensive. If you're building clean rooms to build quality integrated circuits, etc., it's going to be capital intensive, but they've got the cash to fund that. So it's in a good position from an investment point of view. You're not paying much for the growth that's coming, but there's lots of cash to interest you along the way.
Yeah. And if you look at their numbers going back over the last 5 years, their operating cash flow per share has gone from negative 25 cents cents, dollars. What's that going to be? Negative operating cash flow per share, dollars. Yeah, negative 25 cents. I guess that's just in dollars. To $6.18 today. It's gone up and down over the last 5 years, but the TTM is $6.18. You look at their free cash flow per share, negative $1.25 in 2020, up to $4.85 today. Their total revenue, $1.18 billion in 2020 to TTM is 1.5. It was as high as 1.8 in 2024, 1.7 in 2025. But it's gone down a little bit, but it's still good growth over that. It's like a CAGR of 7.72 over 5 years, which is nothing to snort at. Not double digit, but it's pretty good. So yeah, if I had a business like that, I'd be pretty happy.
Yep, I agree.
Growing at 7-8% a year on average. So that's Kimball Electronics. I will add it to my little spreadsheet here, and we'll track it and see how it does. But I just like to see these different kind of companies, learn a little bit about what's out there.
Yeah, we wouldn't have an integrated circuit board manufacturer in Australia, so it's a whole new industry for us that we're seeing in the US.
Yeah. And as we said in the Australian show, though, interestingly, I mentioned that our US portfolio is up about 22% in the last 12 months. Our Australian portfolio is up 30% in the last 12 months. So despite all of the wackadoodle numbers like ZEPP being up 1,200% and lots of crazy stuff happening in the US market, the Australian market's doing fine without these sorts of companies.
Yeah,
for some reason. Yeah, as I said in the last show, somebody asked me at my Kung Fu class today, which is the better market to invest in, the US or Australia? And I was like, doesn't matter. As long as you have a system that you're following, I think it's pretty much the same, right? That's QAV America.
Been my experience for sure.
Yeah. Thank you, Tony. Any last comments before we go?
No, a little interesting company though. Thanks for outlining it.
If anyone is listening to this and you've got questions about QAV, or you'd like me to take a look at a company that you think is a good value investment, shoot me an email. Cameron at QAVamerica.com or CR@QAVamerica.com is probably easier. And I'll have a look at it. We can talk about it on the show or answer your questions on the next episode. After hours then, Tony. Tell us what you've been doing.
Oh, I went away, had a vacation up at Yarrawonga on the Murray. was going to save it for after hours, but that's fine. It was a lovely, lovely week away with Ruddy and my brother-in-law Wal playing golf. We stayed in just a fantastic Airbnb in Yarrawonga, a couple of streets from the main drag, a couple of streets from the lake. And it was a really nice house and super cheap. Stayed in this kind of Victorian, wouldn't call it a mansion, I suppose, but it was very flash and spacious. And we had a great time. Good fun.
That's nice. I'm glad it was super cheap because I wouldn't want you to be financially burdened with your golfing vacation.
No, well, it wouldn't have worried me, but I wasn't the only one staying there. We had a horse run on Sunday, Lake Forest, which missed the start, so didn't do too well.
What's that mean? What does miss the start mean?
I played up in the
late,
barrier.
got stuck in traffic? No, what?
Played up in the barrier, and then when all the horses jumped, it didn't. That was it came out
Really?
last from the barrier.
You've got one job, horse.
Exactly. Or jockey.
Is it the jockey's fault? Like, who gets the blame for that?
Oh, it can be the jockey's fault, but I think in this case, if it played up in the barriers, it was just bad timing. The starter is supposed to keep an eye on the horses and not start the race until all the horses are settled and ready to go. But if we were rearing in the barrier and then the barrier doors open, we missed it.
The horse is just like, no, not feeling it today. Don't want to be here. Don't want to be in this thing. Why have you got me locked into this little booth? Let me out.
Could be all sorts of reasons. Could be, got a bit of a niggling injury. Could be that it's just overexcited. Doesn't want the jockey on board. Who knows? Gets excited, like it's ready for competition and starts to rear and buck and all sorts of things. We ask them and they never tell us. That's a David
Give
Hayes.
AI a few more
That's a David
years.
Hayes line.
Oh, really?
Yeah.
Okay.
Why did the horse run so slow? Well, I asked it and never told me.
Nice.
What
else?
Been listening to your catch up with David Markham, which was really nice on the bullshit.
It was nice.
Mm.
And I'm hoping he'll come on this week. He said he'll come back, and Ray and I are supposed to do a bullshit filter this week. So I'm hoping David will be able to come back on and we can do more politics stuff. But it was really lovely to catch up and have a chat with him. Haven't spoken to him for a couple of years.
I haven't listened to the whole thing yet because it goes for about an hour and a half. But I had a chuckle to myself. I think probably in the first 10 minutes you said about 2 words and David spoke nonstop. So there's a very different cadence to interviews with David, which took me back to Napoleonic times.
That was when my podcasting started. Just ask David a question and then sit back and relax for an hour or 2.
Yeah. But I recommend this. It's great to hear the catch up.
I was like, he's doing well. He said he turns 80 in December. And speaking of people who turn 80 or are 80, oh man, the Who are touring at the moment. What's left of them, Pete and Rog. I read an interview with them in the New York Times yesterday, which was talking about, this is the 15th time they've done it. This is our last tour and whether or not they're going to work again and all this kind of stuff. And then I saw on YouTube, people have filmed the entire concert. So I went and had a look at one. It was in Newark, just like from, I don't know, a few days ago. Sensational. Like Roger Daltrey is 81 and he hits every note. I expected him to do what McCartney does, which is pull down a register occasionally when you've got a really high note. No, he goes up. He pushes it further than he did when he was 35. His voice is amazing. And Pete on guitar is just as amazing as he ever was. He's not as, his windmill arm isn't windmilling as us. And Roger twirling the mic, he starts at the beginning and kind of flubs it. And then he has a chuckle to the audience. But in terms of performance, unbelievable. For men in their 80s, unbelievable. They are the new rock gods. I mean, the Stones are probably hitting that as well. And, as far as I know, they're still kicking it. But Mick, love Mick, but Mick's not Daltrey. Like Mick doesn't, I'm the midnight rambler. He does a bit of a Bob Dylan and you can't always get what. It's not like singing Who Are You or Pinball Wizard or, any of those tracks. Like Daltrey really had to sing and he can still do it. It's just, it reminds me of Russell Mael from Sparks, I think he's 76 or 77 and he still hits really high notes everything. Like his vocal performance is insanely good. His brother Ron is 80. Like they're up there as well. Those guys still doing 2-hour shows every night. Russell's bouncing all over the stage, hitting every note. That's man, like this generation of rockers that have been going for 50, 60 years in the Who's case. 60, 64? 64, I think their first album came out.
I went to the Who Turns 50 concert when I was living in Toronto. That would have been probably 10 years ago or less. Yeah.
So Entwistle would have been gone by then?
Oh, Entwistle
I think he
in the 90s.
Yeah.
Yeah.
Really? Okay.
Yeah.
Right.
He was about 50 years of age when he went.
Oh, man.
Did you notice if Zach Starkey was still playing on drums? Because I know he was sacked, but I thought there was some talk he was going to be reinstated.
They sacked him, they reinstated him, and then they sacked him again. Oh, okay. That was part of the New York Times article. They're like, what's going on? And actually, Pete had a good line. He goes, he was never my favorite drummer. In fact, none of our drummers have been my favorite drummers. I didn't even like Moon. I didn't like Moon as a drummer. I'm like, who couldn't like Moon?
Really? Go, if you get a chance, go and watch the Isle of Wight concert. It'll be on YouTube. It's probably only about half an hour when the Who were playing. But something happens. I think it might be Entwistle's amp blows. And so there's just Moon and Pete left. And they goes on for like, I don't know how long, 5-10 minutes, where Pete will play something on guitar and Moon will echo it on the drums. And then Moon will play something on the drums and Pete will echo it on the guitar. And they just have this amazing rapport going back and forwards. It's
fantastic.
It's incredible. Yeah.
I had a friend over, one of Fox's school friend dads, who's a heavy metal rock guy. I have his kid comes over from school. Chrissy brings him home on a Thursday afternoon. I look after the boys. He finishes work late and comes and picks his kid up. And by the time he's gone home, I've always got something on YouTube. Usually it was like the Aussie tribute concert, or I'm watching something, and he and I sit there, or it's a Go-Betweens documentary or something like that. We're always talking about music. And I had a Who concert on from like the 70s, and we got talking about it. And I said, have you seen the video, the official video for Who Are You? I think it's Who Are You? He goes, no. And I goes, oh, mate, you got to see this. Keith, like just Keith in the official video. He's got his headphones gaffer taped to his head, as he often did. But just the faces that he's pulling, like the camera's really up close and he's doing his drum solo or whatever he's doing. And, after the, in I think it's Who Are You, when it sort of breaks down, the song breaks down and the synth comes in and then Keith comes back in and it starts building up. And, dun, 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 and he's just like, he's just going nuts, pulling monkey faces, and so entertaining. So he's entertaining. Yeah. I love Mooney.
That was in The Kids Are All Right, wasn't it? And he's there rolling his arms.
Yeah. He does that in this too, when they're all singing around a mic doing the
that's from the Kids Are All Right.
Oh, okay.
Yeah, great documentary.
After we spoke a couple of weeks ago, I watched The Man Who Fell to Earth on SBS.
Okay.
And I'm now reading the book that it was based on. I didn't know this, but the guy who wrote that book also wrote the book that The Queen's Gambit was based on, the Netflix series that blew up a few years ago. He also wrote the book that The Hustler was based on.
Oh, okay.
The Paul Newman film, and the sequel, The Color of Money. He wrote those books as well. So he was quite a prolific science fiction / apparently he was a major drug addict and gambling addict, and so he wrote books about what he knew. And The Man Who Fell to Earth is quite good. But yeah, the film really held up well. And I'd forgotten Rip Torn was in it. And I loved Rip Torn. He was like one of my all-time favorite American actors. And seeing here a young Rip Torn in it, well, kind of middle-aged Rip Torn, I guess, but before all of the stuff that he did in the latter part of his career, Larry Sandler's The Gary Shandling Show, and Larry Sanders Show, Gary Shandling, and Men in Black and 30 Rock, and he had a great late part of his career. But I remember I saw him not long ago. He was in Steve McQueen film where he's the poker player, the Cincinnati Kid.
All right.
Rip Torn is sort of the number one guy that he needs to play in that. He's like some Texan with his drawl and whatever. Yeah, great actor. Anyway, so thanks for telling me that was on SBS. That was great. I really
Mm.
enjoyed it.
Yeah, so
And
did
then
I.
I saw a Leonard Cohen documentary on SBS after that too, which was fantastic. It's all about Hallelujah, the song Hallelujah,
Mhm.
and how the album that he wrote that for, he famously wrote like 180 verses for that song over 10 years. And the final version had 5 or 6 verses. And then he'd do it live and he'd do different verses. But the album that was on, the label, can't remember which label it was, Columbia Records, I think, refused to put the album out. They said the album was terrible. They hated it. There weren't any good songs on it, and they refused to put it out, even though they paid for it to be recorded. So it ended up coming out on some little 2-bit label and didn't sell. No one bought it, and that was it. It just Leonard thought he was done, thought his career was over, and he was in his 60s at this point. And then they talk about how that song. Um, um, Somebody did a tribute album to Leonard Cohen, and John Cale picked that song and did a version of it. And then one of the women who was the producers of the Shrek film loved the John Cale version and wanted to put that in the film. They actually had it re-recorded by some younger dude, but the John Cale version ended up in the film anyway. And then Buckley,
Mhm.
whatever his name was, Jeff
Jeff
Buckley.
Buckley. Yep.
Before he was anyone, he was playing at this little club in New York, and somebody said he was looking for songs to play, and it was kind of like, just throw songs out. And somebody said he didn't know the Leonard Cohen version. Somebody gave him the John Cale version, and he did his own version of that. Everyone loved it. It was on the album. He died before it came out. Then it became a huge hit. And then everyone on every American talent show, like America's Got Talent, whatever, there was always somebody doing the Jeff Buckley version of
Mhm.
Hallelujah. And it blew. At one point, 3 versions of it were in the top 20 in the US. There was some America's Got Talent star who had done it, the Jeff Buckley version. They were number 1 and 2. And then Leonard's version was like number 20 or number 18 or something.
Well, Katie Lang covered it too. I think
I
she
saw
charted.
her. Oh, I saw her do it in a tribute concert to him after he died too, which was great. That's actually the
Mm.
film finishes with her doing it live, which was a stunning performance. So they're just talking about how this song, the label hated it, wouldn't even put the album out, and then it just got this massive life. And then they talk about Leonard's career. I mean, the whole thing's about Leonard's whole career and how the last chapter of his life was just amazing. He was so beloved, and yeah, it's amazing. Really great documentary.
I'll look it up. Thanks.
Mm. Goes on SBS. Yeah.
Yeah,
So thanks
sure.
for
A lot of good
putting it on
stuff on
SBS. A
SBS.
lot of good stuff. Yeah.
Yeah.
And I've been reading a good book. I've been reading Zhang Weiwei. He's a Chinese scholar at Fudan University on China. He's got a couple of books on China's economic and political model. There's the first one from 2012 I'm reading. It's called The China Wave. His sort of breakdown on the China model, similar to the one that I read by the Canadian scholar Daniel A. Bell a few years ago. But it's him sort of breaking down. And this guy's like, he's an advisor to Xi Jinping, and I think he was an interpreter for Deng Xiaoping when he was younger. So he's been in the upper circles of the CCP for most of his life, but he has a great way of just explaining why China does it the way that China does it and why it works, in his opinion, why it has worked so well, why it continues to work, and why the West doesn't understand China's model. It's like, listen, we've been doing things our own way for 3,000 years. You guys come along and think you know how to do things. We've been doing this for a long time. We've just integrated the best of all the things that China's been doing for 3,000 years, and we're back on top, baby, and we know how to make this work. So just sit back and watch. So
I saw a great quote It was in a review of a book about China and comparing it to the US by a Chinese person who had spent a lot of time in China, but then was studying in the US and spent time there too. But the quote was great. It said that the difference between China and America is at the heart of the Chinese economy are engineers, and at the heart of the US economy are lawyers. I thought it was a very good summary.
Yeah. But he just talks about, the political model, the social model, and the business model and the economic model, and how they work in China, and how, as we've talked about before, you're allowed to be a billionaire, but you're not allowed, as a billionaire, you're not allowed to have any control over the political system. We'll let you be a billionaire, but don't think you're going to have any say in what happens politically. And as soon as you get too big for your boots, you get taken to a little room and re-educated about.
Sounds like the US at the moment.
Yeah, it does, actually. Yeah, very much so.
Good.
Thanks, Tony. Have a good week.
Thanks. All right, you too. Bye.